Hello everyone, thanks for tuning in. I'm Emily, the home bookkeeper, and on this channel I help business owners and fellow freelance bookkeepers navigate the ever-changing QuickBooks Online, while also sharing insightful videos on all things business ownership and finance. Have you ever wondered what exactly a write-off is? Well, a write-off is a legitimate expense that can be deducted from your taxable income on your tax return. For many, this is the trickiest part of filing their taxes, particularly because there is a fine line between which expenses are deductible and which are not. If you are still confused or if you just want to learn more, then take a look at the information in this video. Hopefully, it'll help you answer any questions you have about what a write-off is and how they work. A tax write-off is a legitimate expense that can be claimed as a deduction or a credit and lower your taxable income. A tax write-off is also referred to as a tax deduction. While people often think of business expenses when thinking about tax write-offs, they can also be deductions, credits, or expenses that you are eligible to claim on your individual taxes, which also reduce your personal taxable income. When you have your own self-employed business, a tax write-off related to your business is an expense directly related to conducting your business. The Internal Revenue Service is responsible for administering and collecting taxes. When you file your tax return, the IRS uses your reported income minus your tax deductions or tax write-offs to determine what tax bracket you are in and the tax rate your taxable income will be taxed. How many times can I say taxed in a video? Let's count. A tax bracket is applied to an income range. For example, let's say when you file your taxes, your reported income is $50,000, with the standard deduction of $12,550 for a single for 2021, or $12,950 for a single in 2022. Your adjusted gross income would be $37,450 in 2021, or $37,050 for 2022. The standard deduction will lower your reported income and, in turn, your taxable income and your income tax rate. The best benefit from a tax write-off is the reduction of your taxable income, which in turn lowers the taxes that you have to pay. Individuals, self-employed, small businesses, and corporations can all write off expenses on their taxes. Individuals can claim write-offs in the form of deductions and credits. A tax deduction is a result of a tax-deductible expense or exemption which reduces your taxable income. A common deduction on your federal income tax return is the standard deduction, $12,950 for a single, $25,900 for married filing jointly for 2022, and $12,550 for a single, or $25,100 married filing jointly in 2021, which is a deduction the IRS allows taxpayers based on income and filing status. Unlike tax deductions, tax credits are subtracted from and are a dollar-for-dollar reduction of the taxes you owe, not taxable income. For example, a $100 credit reduces your tax dollar-for-dollar $100. On the other hand, a deduction reduces your taxable income by $100. The resulting amount of tax you save depends on your tax bracket. If you were in a 24% tax bracket, a $100 deduction reduces your taxes by $24. On the other hand, a $100 credit would reduce your taxes by $100. Common credits include the child tax credit, the earned income tax credit, and the Child and Dependent Care Credit. For some individuals, deductions and credits that can be claimed phase out at higher incomes. The IRS determines what expenses can be considered legitimate write-offs. Don't worry about knowing which tax deductions and credits are deductible. If you are using TurboTax by Intuit, the system will ask you simple questions about you and give you the tax deductions and credits that you are eligible for based on your answers. Businesses can be classified as small businesses based on revenue, sales, assets, or annual profits. But the number of employees is a common measurement used to classify small businesses. If you are considered a small business with employees, like a privately owned partnership, corporation, or sole proprietorship with employees, you will be able to deduct business expenses related to your employees, like payroll expenses and other expenses directly related to running your business. A simple way to reduce your possible income tax bill is to make sure you are claiming all the tax deductions available for your small business. As a small business owner, it will be essential to keep good books and records of your business income and expenses to make sure that you don't miss out on any tax write-offs and cost you more money. QuickBooks can help you manage your business finances all in one place and make sure that you are prepared come tax time. Some common tax write-offs for small businesses include rent expenses, telephone and internet expenses, bank fees, and contract labor, just to name a few. Each business will have some expenses that are specific to their business or industry that can possibly be tax write-offs as well. Many self-employed think that if they set their business up as a corporation or another type of business structure, that they may get more tax write-offs or tax deductions than if they are set up as a sole proprietor. But this is a myth. If you are self-employed, you can take as many of the same business tax deductions as corporations, which will lower your taxable self-employment income. As a sole proprietor, you may be eligible for 20% qualified business income deduction under tax reform, which will be coupled with lower personal tax rates under tax reform. You can also deduct the full expense of business equipment up to $1,080,000 for 2022 in the first year you put the equipment in service. And in some cases, certain non-SUV heavy vehicles used for your businesses qualify. If you put an SUV rated more than 6,000 pounds but under 14,000 pounds in service, you may be able to deduct up to $26,200. If you are self-employed, you may not know all of the different business deductions you are eligible for, but TurboTax by Intuit Self-Employed will search tax deductions specific to your industry. You can easily track your business income, expenses, mileage year-round with QuickBooks Online and easily import the information directly from your QBO profile to TurboTax to make tax time simple and easy. Businesses can be classified as small businesses based on revenue, sales, assets, or gross or net profits. But the number of employees is a common measurement used to classify small businesses. If you are considered a small business with employees, like a privately owned partnership, corporation, or a sole proprietorship with employees, you will be able to deduct business expenses related to your employees, like payroll expenses and other expenses directly related to running your business. A simple way to reduce your possible income tax bill is to make sure that you are claiming all the tax deductions available for your small business. As a small business owner, it is essential to keep good books and records of your business income and expenses to make sure that you are not missing out on any tax write-offs and cost you more money. QuickBooks Online can help you manage your business finances all in one place to make sure that you are prepared come tax time. Some common tax write-offs for small businesses include rent expenses, telephone and internet expenses, bank fees, and contract labor, just to name a few. Each business will have some expenses that are specific to their business or industry that can possibly be write-offs. Corporations are allowed to deduct business expenses that the IRS defines as ordinary and necessary business expenses. There are two types of business expenses: current expense and capital expense. Current expenses are expenses needed to keep the corporation running, and those are fully tax deductible, while capital expenses are items such as investments or real estate that also qualify for deductions if purchased to generate income from the business. However, ultimately, the IRS tax code determines which deductions a business does or does not qualify for. A normal business deduction for all businesses are operating expenses, which the business relies on to operate on the day-to-day basis, such as rent, office supplies, and payroll expenses. Another customary business deduction for a corporation are employee expenses, such as employer-sponsored health benefits, tuition reimbursement, bonuses, awards, sick leaves, and employee salaries. The amount that a tax write-off is worth depends on several factors surrounding the deduction or credit. Many tax deductions and credits have limits which are prescribed by the tax provisions, and the limits can depend on several factors like your filing status, income, and dependents. In some situations, the amount you can write off may be limited based on your adjusted gross income, such as student loan deduction, which begins to phase out with income over $70,000 as a single person, or $145,000 for married filing joint couples for 2022. In some cases, it is possible that taking the tax write-off would not be to your benefit. Say your total itemized deductions are less than the standard deduction amount for your filing status. It would be in your best interest to choose the standard deduction instead. Fortunately, when you file with TurboTax, it eliminates the guessing game and figures out which option would benefit you the most. Standard deductions versus itemized, based on your entries. While not everyone will qualify for every tax write-off, here is a list of some common tax write-offs. Of course, the standard deduction, which is the specific dollar amount that reduces your taxable income, mortgage interest, student loan interest, donations to charities, medical and dental expenses, traditional IRA contributions, health savings account contributions, and of course, those self-employed business expenses. It is normal to have yearly expenses that don't qualify as a tax write-off and are non-deductible. Also, it is possible that an expense can be legitimate but excluded from being deductible on your taxes. Here are some common expenses that you cannot deduct, like child support, alimony paid on divorce agreements entered into after December 31st, 2018, political contributions, 529 contributions, no federal deduction, but it may be deductible on a state tax return, and Roth IRA contributions. Knowing when an expense qualifies as a tax write-off or a tax deduction can be trickier than it seems. Here are some expenses that can be deductible, but they come with specific conditions. Home office. The home office deduction used to be an expense that some self-employed business owners were hesitant to take, but if you have a dedicated space in your home where you conduct business, you should not hesitate to claim the home office deduction, which is a portion of your home expenses like rent or mortgage interest, property taxes, and utilities based on the square footage of a specific space in your home that you use for your home office. The IRS also allows you to use the simplified home office deduction, which is up to $1,500, up to 300 square feet at $5 per square foot, depending on how much space you use in your home. Home office computer. If this is the only computer in your household, you will need to calculate the percentage of time that you use the computer solely for business purposes. A guard dog? Believe it or not, a guard dog is considered a justifiable expense as long as you only deduct the time the dog devoted to guard duties for your business. Uniforms and costumes. If your costume or uniform is something you could wear outside your job, you shouldn't write it off. If, however, it's obvious you can only wear it for duties of your specific job, then it qualifies as a write-off. A polo shirt you could wear golfing does not count. A hot dog suit, if you were a hot dog vendor, no, it's funny, but it counts. For more business resources, my online self-paced home bookkeeper masterclass, business supplies, gadgets, must-haves, and more, make sure to check out edjconsultinggroup.com/resources, linked below. And of course, like this video, subscribe to my channel, and turn on those bell notifications so you'll never miss an upload. If you have any video or tutorial requests, make sure to leave them in the comments below. And for even more behind-the-scenes content of life as a home bookkeeper, feel free to follow me on Instagram at @EmmaDawn and connect with me on LinkedIn. And if you need more assistance, personal financial coaching, or bookkeeping and payroll management, feel free to email or visit edjconsultinggroup.com. My firm is fully inclusive and ready to help you along wherever you may be in your entrepreneurship or personal wealth building journey.